Hello again, everyone. This is Joe Hinches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, December 6th. We're going to take a look at the market, the weekend edition. So we'll look at on the daily, the Dow and the indices on daily and weekly basis, our indicators, and then I'm going to look at the top 2% gainers and the top 2% losers of the 42 stocks I follow closely. Let's start off here with the Dow Industrials, which was up 58.7 points on Friday. Continuing this, continue pushing here, just riding above the blue line, above the 10 exponential moving average. It's just an amazing run, honestly. I mean, in terms of the way this thing has continued to stretch out to the upside. We are getting some divergence on the RSI. We're getting divergence here on DI+. And, on the demand index, it looks like that's not a very good line when you blow it up. It looks like we're getting some divergence in here too. So divergence is starting to show up. Let's take a look at the S&P 500. It's a similar type scenario. Very tight trading range on Friday. You can see why sometimes we're just getting difficulty with follow through on some of the stocks in terms of movements. NASDAQ, not getting the divergence so much in here, not as clear as on the other, but notice how the NASDAQ has not pushed to new highs here either this last week, whereas we, closed, is this another new high? I think it is, 2075, yes, so slightly, just, fractionally higher. And then, of course, the Dow, another new high in here. It's like, okay, it's like, it's like a broken record, just keeps playing. The New York Composite, this is interesting, and the same thing with the Russell 2000, which we'll look at in a minute. Again, this and the NASDAQ did not push over the last week or so, has not pushed to new highs. And the New York Composite has not gone to new highs, even on an intraday basis, or the closing high was all the way back here on July 3rd. Okay, so I'm still really intrigued by this action and the fact that it looks like 5 waves down here and then this, snapback rally that did not go to new highs. So if this continues to hold, it looks like the New York Composite is playing out a wave 1, wave 2 back. But again, we'll have to just see whether or not this starts to roll over or whether it continues to push to the high side. Russell 2000, you can see the Russell 2000's closing high was back here. Actually, it might have been earlier than that. No, I think that was it. March 4th. Okay. Fractionally got really close on July 3rd, just like the New York Composite. But it was just fractionally below 1208.15. This is 1208.65. Okay, so this one just fractionally, but they're almost exactly equal. And yet down in here, they're well below. Again, we're still below this major trend line that it's pulled back to. We're getting this type of price action in here. Support around 1155 to, in that 1150 to 1155 zone. Right now, and it was up, nicely on Friday, 9.42 points. Let's take a look. We've got this divergence that's in here that showed up last week, and same thing showing up here on the directional movement. But notice how it's starting to get kind of tight and overlapping in here. So that's really, it's kind of it's reflective of what this is doing, which is just chopping sideways, back and forth sideways. It's really in this zone, right? I mean, if you look at between here and here, I mean, this is the trading zone that it's been in, the trading range that it's been in since, you almost have to call it from here. Okay, since November 12th, basically been in a sideways trading range. All right, look at the weekly basis on the Dow Industrials. Not seeing any divergence here on the weekly basis. And again, continuing to push higher, coming off this really tight bar last week. S&P 500. I think we're getting divergence here a little bit. I mean, you can, again, when the bars when your points get too far apart, I get skeptical of it. My ideal, and maybe this isn't so far apart, where are we? 2, 4, 6, 8, 10, 12, 14, 16, 18. That's not too far apart. I like to, think of it in terms of somewhere around 18 to 20 bars is the ideal points that I like to look at for divergence. Sometimes they're greater, sometimes they're smaller, but I'm just saying, from an ideal perspective. So this is, this is still, pretty valid in here in terms of the divergence that's showing up with the on the RSI. So we could be, getting close to the point where it's going to roll over. I mean, it's really, and here on the NASDAQ, you can see the same thing showing up. Not seeing it on DI plus, and on demand, we're definitely seeing it on the demand index. I mean, it's stretching all the way on over, okay, on the demand index. And, part of this reason, this kind of a mixed story that we're getting in here is why I think, we're getting mixed, like I talked about on my post on Wednesday, we're seeing this, number of stocks that are down, the number of stocks with moving averages trading to the downside. It's almost like maybe a 40-60 scenario kind of thing. I don't think it's quite 50-50, but all right, let's take a look at the, in terms of stocks that are in downtrends is what I'm saying. Let's take a look at short-term trading index. No real change. We're right in the middle, so no extreme reading there. The VIX, where are you? There it is. The VIX again, it tried to, on Thursday, tried to push to the high side, sold back off. Nothing new here on Friday. This is definitely not showing a sign of turning around. It's collapsing down. So we're not getting any turnaround picture on the VIX. And let's see, the next one we look at is the high-low. This is interesting because we're definitely getting divergence on the high-low indicator. I mean, look at this. This is from October 31st. Okay, so this is all of November and into the first week of December. Okay, so all of November 1st. Now you compare that to the Dow Industrials. What did it do since the end of October? Just like this, straight up. And the high-low is just not confirming it. It's not confirming that picture at all. Okay, next one we're going to look at is the high yield, which we talked about on last week. And how I was seeing how this breakdown, moving averages cross over the push to the lows, push down like this. Again, in the past, this has been almost like a leading indicator of movement to the downside of the market, yet the market has chosen to ignore it this time. I mean, look at the, again, the S&P 500 picture and, the high yield fund. And it was interesting. I came across an article. I'll put a link to it in my post today. But there was an article that talked about this very issue. And, people are, wondering, what's going on. Either this is a setup for a very dramatic, sharp move that we're going to get hit with in the market, or something else is all of a sudden going on. And some people are speculating that this could be tied to the big oil drop in price in oil, and that there's high yield debt out there related to the oil related type stocks, and that therefore this sell-off is related to that activity. So I don't know. I mean, and I'm not sure a whole lot of people know for sure either. So the put to call ratio I was going to mention is at 0.60. 10-day is at 0.60. So again, I don't have an extreme reading yet. It gets extreme when it gets below 0.55, and we're not there. Okay, so now that's it for the indicators. We looked at the daily and weekly on the indices. Now I'm going to look at I know what I wanted to look at. I forgot. I was going to look at the ETFs in here, semiconductor ETFs. Look at this. I mean, the semiconductors just continues to push to the high side. We're not getting any kind of rollover on semiconductors. The next one is the home builders. And the home builders had this big reversal bar I talked about on Wednesday, I think. And so now we've just gone sideways last 4 days. And so we're still within this range, but it does look like it really tried to reverse up here. But we haven't broken down and traded below the 10 yet, which is what I want to see, at least as a prelude to a rollover. Okay, just like, you know, it started to do in here, started to trade below the blue line, and then it struggles it, and it starts to trade below it, little snapback after it crosses, trades back below it, and then it's on down. So, you know, you need to start seeing that before it's going to roll over. That's what I'm looking for. And then on the last one, we'll take a look at the financial ETF. And this snapped back, and this is what I was in Goldman Sachs and got stopped out. And this is what happened because of this move here on Friday. So again, this is not showing any sign of topping out, or I don't think we're even getting any divergence in here. I mean, nope. And so, you know, the market, even though the market's, it's kind of, again, it's just a whole series of mixed signals. The market looks like it, you know, it's getting some divergences, looks like it ought to be trying to roll over, but yet some of these things that typically are like a prelude or a warning sign just aren't showing up yet. So, you know, we gotta pay attention to that. All right, we're going to take a look at the top 2 gainers for the day of my 42 stocks were Jinko Solar and YOKU Tudu, percentage-wise I'm talking about, okay? So the biggest percentage gainer of the day was Jinko Solar, which was only up 0.79, but percentage-wise it was a nice, really nice gain since it closed at 23.45. So I think that the correction could be over down into here, but this action still looks kind of corrective to me. So I'm skeptical as to whether this is over. And, you know, we've got this little support line in here. This looks a little bit like a snapback type rally, but, you know, we'll see. I mean, again, it looked like it tried to turn in here and then sold off and broke down. So we'll just have to continue to watch it. I'm not buying into this, that it's a bull move to the high side by any means yet. I mean, it still looks corrective to me. And then the next one, YOKU Tudu. This one I thought had the possibility of forming a head and shoulders bottom, and you know, I've had a trend line or a neckline drawn across here, and thought maybe we're getting a shoulder, head, and then if the shoulder would have stopped in here. But now this has gone deeper than I'd like to see. It's still possible. So I still think we could be in some bottoming. And again, given that China is just, the market's exploding to the high side, I'm thinking that things may turn around in here for YOKU. There's been this whole corruption crackdown and everything going on in China. It's hurt the video side of things related to internet. And I think this is what has been hurting YOKU Tudu, you know, over the last few months. And so now, I mean, I'm wondering whether or not we're getting a little bit of a turn in here. So I'll be watching. We get a couple closes above the 10 and I may get interested. And right now we're just not seeing it yet, but it looks like it's trying to come back. Okay, and then to the downside, the two biggest percentage losers were Valero and Apache. Valero has gotten very volatile the last couple of weeks. I was in this, you know, had puts in here, should have been a little more cautious because of this big wide-ranging bar, WR7 bar, the widest ranging bar the last 7 days. And then we got stopped out on this big whip up here, okay? And then look at the big bar action that we're getting. Let me get rid of this. You can see, you know, huge bar here, huge bar here, huge bar here, huge bar here, and huge bar here on Friday. So, you know, again, a lot of wide swinging back and forth, a lot of volatility here on Valero. Not quite sure what to make of it. You know, the 55 is below the 233. It's really, really hard to tell. Let me see if I back out. And now I think again, this is a sign we're in this kind of corrective action. I mean, we're definitely trending down, okay? Lower lows, lower and higher, lower highs. Lower lows and lower highs, Okay, we're still in that mode here. And here's the other thing on Valero is that I think we've had 5 primary waves up. Either 5 primary or intermediate waves, it doesn't matter, 5 waves up as I'm counting them. And so if that's the case, if we have 5 waves up, then we need to correct these 5 waves. Okay, so I'm not sure that we've gotten enough with that this move in here. And with this kind of action, we'll just have to continue to watch. I think there could be more to the downside. So that's Valero. Apache has been in a really strong downtrend. And this is the last one we'll talk about today. Apache's been in a strong downtrend. You know, I had these fan lines I'd drawn in here. Let me blow this up. And, you know, broke through these lines. I talked about how similar this was to Yelp. I'll talk about Yelp tomorrow. It's because it's one of the trade ideas I'm in. And Yelp was actually the 3rd biggest percentage loser yesterday. Finally broke down like I was expecting it to. But now Apache, this is really going to be interesting whether or not it's trying to get its legs in here, because this is a potential again, Linda Ratchke and Larry Connor from the 90s on their book, Short-Term Trading, talked about a setup called the Turtle Soup Plus One. And so this is a potential Turtle Soup Plus One setup. Okay, you got a new 20-day low right here. And that was 4 days prior to this close below this 20-day low. So you get this close below it. Now on Monday, we trade at it or above this, which is 62. We closed at what, 61.64. You know, then according to their setup, you would buy, and you put a stop right below here. Okay. So at 62, say 62.05, you would buy and look for, you know, a rally. Now, I'm not playing it because this is just too steep of a downtrend, and I'm trying to, that's not a high percentage move to me, okay? But we are getting some divergence in here. Very minor in here. Now, we are getting it as compared to here for this sell-off compared to here. You could say that there is some decent divergence coming in. Same thing showing up here on DI minus. And yeah, on the demand index, you could say the same thing between these 2 points. But again, this is not as high a percentage as it is trying to trade, say, with this trend to the downside, you know, trying to take trades, you know, with this trend. And so I've noted, I saw this turn around. It'll be interesting to see if we do get a pop back up, maybe even up to, say, this point here, which is 69.28, but I'm not playing it. So, all right, that's it on Apache, and that's it for today. We'll be back tomorrow with trade ideas, and we'll take a look at what we've been in and if there's anything new for the coming week. So, all right, this has been Joe for Beyond the Chart. You have a great week. Well, I had to grab some water there. I was losing my voice. But anyway, have a great weekend, everyone. If you felt like the video was helpful, please share it on social media. And also, if you're not a subscriber, just subscribe. It's easy to do. Just click on the little box and first name and email, and you get access to the Trade Ideas webpage. You can download the free PDF I've got for you. All right, we will be back tomorrow. Everyone, have a great day.